Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 844 today, and today's date is December 16th, 2015, and the title of this episode is, As the Fed Raises Interest Rates, the Dam is About to Burst, and the Entire Economy Will Implode. Let's get right into the economic collapse financial news. Now, out in Europe, we see the Eurozone growth. It has really slowed down. We're approaching stall speed right now. And they're blaming this slow up, the decline of the Eurozone, on the terrorist attacks in Paris. If you noticed, they're moving all eyes and everyone away from the central banking system onto the terrorism that occurred in Paris. This is why the economy is not doing well. The economy was not doing well in the Eurozone for years since 2008. It has never improved. It is flatlined, and it's getting worse. Yes, they have little bumps in the road where they say, oh, look at this little improvement. Oh, look at that. But then, you know what? It quickly goes away. William Hague is saying, yeah, the Eurozone troubles are going to intensify in 2016. This is UK's former Foreign Secretary, which he predicted on Tuesday that difficulties of the Eurozone will remain intensified in 2016. He said the deal with Greece is unsustainable, and almost everybody knows it, and it's going to spread and get worse. He added that the greater crisis that will emerge in the Eurozone is not about liquidity, but about competitiveness among countries and large economic divergences, which will lead to political fragmentation. We're already seeing this. We know the Eurozone is not doing as well as everyone wants to believe. We know there's negative interest rates. We know they're creating money. And everything is really starting to ramp up now. And this is exactly what the central bankers want. They want you to believe that everything is fine. They want you to believe that we're in a recovery. This is their meme for the entire period since 2008. Look, we're improving. Look, unemployment's getting better. But has it really over time since 2008? No, it really hasn't. Have they manipulated numbers? Yes, they have, to make it look that way. Here in the United States, the illusion is being pushed as hard as they possibly can to continually make you believe we have recovered completely. This is part of their plan. Remember, they don't want to be blamed for what is coming. And right now, millennials, those young adults, ages 18 to 34, they do not have savings today. They have under $1,000 in savings. I mean, this is just unbelievable. And a lot of this is because it's getting harder and harder to find jobs. And the jobs they are finding, they're low-paying jobs. And right now, the millennials are projected to about 75.3 million for 2015, surpassing the projected 74.9 million for baby boomers. The millennials will therefore comprise a greater percentage of the population than baby boomers for the first time. So when they did their survey, they looked at 2,585 people, and the results of the survey found that over 50% of millennials have less than $1,000 in savings. They don't have enough for an emergency. 51.8% of millennials have less than $1,000. 18% of millennials have savings of $1,000 to $5,000. 7.3% have a savings of $5,000 to $10,000. 6.4% have a savings of $10,000 to $20,000. Since millennials are growing at a huge percentage of the population, their savings and spending habits will increasingly have a major impact on the overall economy. And what we're seeing right now is that these young adults, they can't find the work. They can't find the high-paying jobs. And this is why we're seeing such a big problem. And this is not just going to go away. We have to understand that a lot of these jobs are being shipped off overseas. A lot of these jobs no longer exist in the United States. And the way companies are laying off right now, it's going to be harder and harder for these young adults to find jobs. And the housing market is going to be affected by this, because if they only have $1,000 in savings, how are they going to buy a house? It's impossible. This is why they have 0% down. This is why you can bring people in and hopefully get a house using other people that live with you. But all of a sudden today, housing starts rose by 10.5% after they plunged last month at a rate of 12%. Building permits rose 11%. But when we look closely at this, we're seeing that it's not coming from the single family homes. It's coming from the multi-family homes. So what this tells us is that the hedge funds, the investment companies, received oodles of free money from the Fed to gobble up and start production of multifamily houses to rent. This is what they've been doing for a long time. This is why we see these ups and downs. Because what happens is the people here in the United States, the millennials, they are not supporting the housing industry. It is the central bank. And what they do is they push out money. They tell them to go out and get it, get what they can, and the number gets pumped up. Then they let it go, and then all of a sudden it falls right back to where it was. We see that mortgage applications have declined once again. They are not improving, and this shows you that the people of the United States, they're not helping this economy. They're sitting on the sidelines. Manufacturing PMI has plunged to the lowest since 2012. Factory orders have completely collapsed back to 2009 lows. Markets manufacturing PMI is at 51.3. It is the lowest since October 2012. I mean, what we're seeing right now is a complete disaster scenario of the manufacturing industry. Industrial production crashes most since 2009. For the third month in a row, U.S. industrial production dropped month on month, crashing 0.6%. This is the first time since 2009 that industrial production fell year on year by 1.2%. Basically, it's signaling a major recession/depression. Capacity utilization fell by 77%, the lowest since January of 2014. And of course, back then it was blamed on the cold weather. So how do they explain it right now? We're not seeing frigid cold weathers right now. We're not seeing snow right now. In the 35 years, there has not been a drop in industrial production without a recession. So if the weather was to blame for November, let's say, as it was for January, what happened to all the other months? March, April, May, June, September, October? Because the weather was very nice in those months. And this is why we know this weather story that they keep throwing at us is, again, fake, phony, and false. To add to all of this, the Baltic Dry Index tumbled to 471, the lowest level in the last 30 years. This is the worst ever. And this is an economy that's improving? Seems like the opposite is happening right now. But don't worry, the Fed has come in and they have announced they're going to raise the federal funds rate by 0.25% to 0.5%, up from 0 to 0.25%. Now, they're also telling us that they're going to raise these federal fund rates 4 more times next year. And we have to remember, next year is an election year. Remember that election year back in 2008? What happened during that period? the entire economy fell apart. The Federal Reserve told us that everything was fine. We were actually doing very well. Everything was contained. There were no problems. The economy was not declining. Here we have the Federal Reserve telling us that we've recovered. Unemployment is at full recovery mode at 5%. Most likely it will go down to 4.9% either in December or January, or maybe even lower. And at this point, they need to convince everybody that we are in a recovery. Now, let's look at what happened last time. Back in 2008, when the interest rates were a little different. And the last time the Fed actually raised rates, we see that the S&P 500 level was at 1273 back then, which is some 770 points below where it is now. 10-year Treasury yields were nearly 300 BPS higher and all the way up to 5.194%. The euro exchange rate with the US dollar was at 1.267, which compares to 1.093 now. Back when US housing starts were booming, we saw 2.25 million per annum. And where are we today? US housing starts are under 1 million per annum. Central banks have purchased a remarkable 12.4 trillion of financial assets since Bear Stearns. And we look at the debt to GDP ratio. Back then it was 61%, and the total debt was around 8 trillion. Now, total debt GDP is 104%. And the US debt is just shy of 19 trillion. Does this sound like a recovery? No. It looks like everything is much worse. So why did they do this? Well, they knew they couldn't keep it at 0% because they lose credibility. They would say, okay, we're at 5% unemployment, full recovery. The U.S. government and the Fed has continually told us that the economy looks quite strong. Housing looks good. Retail looks good. The president continually tells us how great everything is. And if they didn't raise the rates at this point, they would lose all credibility because they'd say, okay, why are we still at 0% if everything is fine? So they had to raise the rates. And this tells us, at this point, they are getting ready to bring down the economy. Because we know what's going to happen. Now, is this going to happen tomorrow, the next day, or a couple weeks from now? No. We will see cracks in certain parts of the industry. We're already seeing them, but the cracks will now widen. And they'll say this is normal. This is what we're supposed to see. And then they'll talk about raising the interest rates once again. A lot of fanfare, a lot of everyone going around and, yelling, yes, they're going to do it again, just like they're doing today. They're saying, we're in a full recovery. Everyone believes it now. This is part of their plan because all eyes are going to be off of them. All eyes are going to be on the event and war. And they might tell us many times during the year of 2016 that they're going to do this. But when they go ahead and try to do it, and they're going to say they're going to be doing it, all of a sudden something is going to occur. Because they've just shown the world that we are in a recovery. That they've done it. If we go back to 2008, President Obama, the Fed, they brought us from a recession/depression all the way up to full recovery. Now everyone is believing. And this is exactly what they wanted. And this should tell you, at this point, to get prepared. They have just sent up the signal flares. They are prepared and ready to bring down this economy. If you have not prepared, you better start now. You better start ramping up on the food, the water, medical supplies, ammunition, gold, silver, toiletries, you name it. Start doing it. If you haven't started, go to lifereliance.com. They have bug out bags, seeds, water filtration systems. You can customize your orders. There's pre-made food ready to go. Now, it looks like Russia is continually reducing their holdings of U.S. securities. They've just dumped $7 billion in October. Turkey has just reduced their U.S. Treasury holdings by 25%. What does this tell us? So far, China, Japan, Turkey, Russia, many other countries are reducing the number of securities they are holding. They are getting rid of it. They realize what is happening. And what is happening is that this system, it's collapsing. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.